What's going on, YouTube? All right, and so based on what we've discussed so far, we've done the first two lessons, one being the hardest, easiest way to make money, second being the live trade. Now, the purpose of those two videos was just to slowly introduce you to what's to come and how we're going to get into the swing of things and get you guys to really understand how to manage your mindset, but more importantly, how to use the indicators that I use to trade as well. So we're going to get to the core of things. And all I'm asking you guys is to be patient, because if you can't be patient, there's no point in actually going through with this course. You know, it's everybody wants things done yesterday kind of story, right? And this was one of the main problems that I had. I had no patience. You know, I wanted everything done now, and I wanted to earn money now. I wanted to understand everything now, and it just doesn't happen like that. So the sooner you come to accept that sort of mindset, you know, you're on to the next step, which is, you know, developing the tools and working out exactly how you're going to approach trading. Because with persistence and dedication, you're going to achieve it. You know, it's going to work. There's no one can tell you anything different. All right. I mean, everyone's conception of trading is gambling. And those are people that don't understand it. You know, and I watched something, it resonated with me so much. This woman was interviewing this guy, and she says to him, "What's the biggest lie you were ever told?" And he said, "Simple as that." Sorry, no. He said, "It's not so simple." And she was like, "What do you mean it's not so simple?" And he goes, "That's the lie. People that have told me it's not so simple, that's the lie." And what he said afterwards, it just stuck. And he said, when someone says to you it's not so simple, it's what they say to get you to not do it. Now, when you hear about everything, any topic that you want to talk about or study, where someone has been successful at it, someone's going to say, "Yeah, but it's not so simple. It's not so simple." You know how they throw that sentence into there. And that's a limiting belief. From that other side, from the person saying it to you, all they need to do is just get you to believe that it's not so simple, so that the limiting belief can come into play again. Mark Douglas, Trading in the Zone, telling you guys, if you haven't read the book, read it. It's applicable to all aspects of life. So what I say to you is this, guys. This system, this way of trading can be simple. It's only if you start complicating things, if you start throwing in spanners and start thinking, you know, you can change things about. Stick to this course. Learn everything that I'm putting up, and you will flourish. But it's only down to how committed you are. Because you can watch these videos, and then at the end of the videos, you think, okay, cool, now what? Apply it. And guys, listen. You have any questions, fire them at me. You know, this is what this course is for. I'm here just to answer questions. You know, I'm happy to do this for you guys. So, enough rambling. The topic of today's course, lesson, whatever you want to call it, is the 8 rules. Now, I came up with these 8 rules whilst I was developing my mindset. You know, I was coming across so many rules lists from loads of traders. You know, Google it, you know, rules for trading, rules for mindset. You know, everybody puts their own rules list, and they just throw out generic shit. All right. They just put it all out there, and they expect you to stick to them. Right. Because some of these rules, they're easy in theory, but they are difficult in practice. But it's how well you're committed to wanting to make sure that you get these rules ingrained in your mind, all right, as to whether or not they're going to work for you. So we're going to get into these 8 rules. In the actual description, I've got a link to where you can download the PDF where it goes into more detail about the 8 rules. So you've got it there visually. But I'm going to use this video just to break everything down for you. So you've got something to listen to maybe while you're driving, or maybe at the gym, or maybe not at the gym because we're in lockdown now, but for whatever time you feel fit for it. All right, so let's go. These 8 rules are a build-up of frustration, anger, and just regret with myself and in the decisions that I made. Trading itself is not about understanding the markets. It's about how well you apply yourself within the market. You're not there's no hero trade. If you manage to take money from the market, well done. But that's as far as it goes. You need to get to a stage in trading where a win is no different to a loss. It's part of the process. Like, let's take Ronaldo or Messi. When Messi scores, he's not really impressed with himself because he knows through the years of him practicing and mastering his shot, he knows that when it's time to deliver, he delivers. And this is what you need to try and get yourself to. You need to get yourself to a level where you're not fazed by a win and you're not fazed by a loss. If you win, you say, okay, we talk 10, 20 pips, next trade. And if you lose, lost 10, 20 pips, next trade. A lot of guys that trade, they will boast on their wins. I got this right, I got this, I'm a genius, I get it. Let's start planning on what we're going to buy with our money. Guys, don't. That's a surefire way to get your account blown and just send your money to the pools of liquidity that the market makers ever so desire. These 8 rules have allowed me, I've got these rules printed out right in front of me, even after so long, because each rule is a memory to me. Each rule is something that I used to do wrong. Now, guys, I'm not saying that these rules mean that I never make a mistake. They just allow me to put things into perspective. It's like when you place a trade, you lose or you lose really bad. Automatically, you think that your next trade is probably going to end up like that. And then what you then do is you start to replicate that behavior to the point where you lose your money because you haven't let go of that last trade that cost you so much. So these rules are guidelines or reminders of what not to do, but more so what to avoid, or puts it into perspective if you're starting to feel like you're deviating away from what the rule is saying. Let's get straight to the first rule. Look, I'm not going to be naive and say you just have to accept the concept of uncertainty and that's it. If only it was so simple. In the last video, I was touching base on when our minds, we seek the safest option. And it's just not a simple thing to do. It's difficult. We are not naturally wired to accept uncertainty. Now, go and take anyone or any psychologist or anything like that. They'll just tell you that our brain is wired for the safest option. That's what it is. Our survival instincts always kick in before we need to survive. And the way we do that is we always look for a safer thing. Accepting uncertainty allows you to be free when it comes to making a decision in trading. Said it to you in the last video. Why would you be fearful of something that doesn't exist? It doesn't make sense. And this is something that, it took me a while to work out. Like, how can I not be concerned with putting money down and not knowing what's going to happen? But that's the wrong way to see things. You can't come into this game with the expectation of something that you desire so much to happen to occur. It's being results-based orientated. You don't want to be results-based orientated because there's no guarantee that the end result is going to happen. So all you can focus on is execution, your behavior. Let uncertainty stay uncertain. That's not really your, how can I put it to you? You're not the guy to resolve the matter of uncertainty. The only way you're going to resolve it for yourself is if you accept that it is what it is and stop trying to fight it. Guys that come into the market and they're like, right, I want to be a trader. They want the title. I want to make as much money as I physically can. Okay, you do that. You're not going to last. I was speaking to a guy only a few days ago, how he was saying that, he's got his rules down, he sticks to them. He hasn't got a problem with psychology. He does everything to a T. And part of me was envious of the guy, because for him to be so confident to say that he doesn't really care about, psychology, tells me that this guy could turn in, give this guy, the right system. Okay. He will just kill the market for what it's worth, because he's operating without a care for uncertainty. He knows his rules. He applies them accordingly. When he's right, he's right. When he's wrong, he's out. And that is where 99% of traders need to be if they're going to stand a chance in this game. But the problem is, most new traders, they get caught up with the idea of what trading can create, not what they need to do in order to get to that stage. So when you accept uncertainty, you do effectively become carefree in your trading. Carefree, not emotionless, carefree. I've been trading a while and I still have emotions. I'm still the guy that's going to stand up and nearly break my laptop and be like, what are you guys doing? Or what are they doing? Why is the market makers doing this? What's going on? Why is price holding that? Surely this, I'll have these conversations with myself. I am human, and I'm not expecting you guys to become some alien-like beings, okay, when it comes to trading and not have a single emotion. It just doesn't sit. It's not going to happen. We've got to be realistic. But what we can do is we can take steps. And the first step is to accept the fact that you have no control of what you don't know. Stop trying to control it. And then once you've established that, you can then go on to place trades. And you won't have that problem of having to, study so much and, get your analysis in and be confident that based on what you've studied and all the research that you've done, this trade should go to the upside or to the downside. It won't matter. You're operating on the basis of uncertainty. All right. I won't even go to the extreme of actually going to research anything. Maybe in stocks, have a little bit of information about your stock that you're buying. But 9 times out of 10, when it comes to Forex, you're not going to know what's going to happen next. And even when you look left, there's only certain times when you look left, so you look back in the chart. Based on how I use this system, it gives you an inkling as to what the market makers were doing before, or what was price doing before, and is it likely that it's going to do it in this area at this point in time. And if you do believe so, you pay to play. That's how it works. If you've got a conviction, you pay to play it out. Don't sit and waste time writing and researching. The more you research, the more questions you're going to have to ask, and then the less chance of you placing the trade. Place the damn trade. If it goes in your favor, great. If it doesn't, move on. It's as simple as that. I'd say that this rule was probably the most expensive rule to realize. I mean, look, you will never determine the end of a move. Take whatever the market gives you. Remember, we're operating on the basis of uncertainty. You never knew price was going to get to your target profit. Okay? So take whatever it gives you. When you start becoming the hero and you think, okay, I'm going to hold it, as the old saying goes, let your profits run. Yeah, there's a problem with that. You need to let your profits run with the understanding that the market is operating in favor for your profits to continue to run. All right? Because a lot of new guys that come into trading, they will see that quote where it's cut your losses short and let your profits run. If you do that, you'll be successful. Well, I'd beg to differ. The amount of times I've allowed profit to run, okay, and in the end, what was profit ended up being a loss. But in the back of my head, I'm thinking, but the gurus, the guys, they said that, let your profits run. Like, obviously there has to be some element of preservation here when it comes to managing a position, but you've got to appreciate the new guys that come into trading, right? They don't know any different. When they Google it or they watch it on YouTube and the guys throw out there and say, look, let your profits run, okay? Look after your losses and let your profits run. It's misleading. Now, that's not to say if you then become a well-rounded trader where you say to yourself, okay, based on what I can see in front of me, it looks like momentum's still in play. I'm going to hold this trade. Happy days, all right? But in the first few instances, guys, you need to get used to taking from the market. Always take from the market. All right. Remember, we didn't know that price was going to get to that area. All right. We made our analysis. We came up to a conclusion, and all we needed to do was place the trade to see if it would play out. So always take whatever the market gives you. Now, I'm not saying like when you open a trade and in the first pip, close your trade. Let's be realistic. All right. Give the trade a chance to move, and when you feel satisfied with what you're earning, pull it out. It is genuinely that simple. You see a profit, take it. Don't aim to make a ton of money in your first trade. You won't. And if you lose on your first trade and you've only lost 2%, 3%, 10%, congratulate yourself. Because most traders blow their accounts because they don't want to be wrong. Have you ever asked yourself, before you even work out how much money you're going to risk, what's your relationship like with risk? Are you comfortable putting money down? And speaking of money, what does this money mean to you? They always say, only risk money that you can afford to lose. Well, frankly, that's setting you up for failure. Because if I were to place a trade and in the back of my mind I'm like, yeah, I'm happy to lose this money because I can afford to lose it. Nah, doesn't sit right with me. It doesn't make sense. Why should I allow myself to believe that it's okay to lose my money? No, you need to protect your capital. Because if you can't protect your capital, you're not in trading. Done, finished, out the game until you decide to deposit more money. And then when you do deposit more money, you're going to have that mindset still in the back of your head saying to you, only risk money that you can afford to lose. No one wants to lose money. However, in this game, you do lose money, but that's only down to your level of risk. What is your relationship like with risk? If you're happy to lose only a fraction of money on your account, great, okay? But don't come into the game thinking that you only trade with money that you can afford to lose. Yes, there are instances where you can lose all your money. Now, we have to be responsible as well. I'm not asking you to take your mortgage payments, rent, okay, and then put it into a trade. That's being reckless. So I can understand why they say only risk money that you can afford to lose, because the problem with trading is it's covered up as a form of gambling, right? And that's what frustrates me. People just call it gambling, right? And they don't really appreciate that this game requires you to express yourself in so close to an artistic form. It's how do you behave in moments of uncertainty? How are you behaving in, when you're having to think on your feet? When money and values on the line, what's your character like? Are you going to come out? Is you the best of yourself coming out when it comes to being a trader? So when you do come to understand risk, all right, I'm not speaking mathematically, I'm speaking in terms of mindset here, all right? Trade with money that you plan to grow, all right? Because naturally you'll become more aware of preserving it. Don't tell yourself that you're going to be, trading with money that you're happy to lose. You're not happy to lose it, but losing is part of the game, and losing so small is the skill. That's what you need to be doing. You need to lose as smallest amount as possible. All right? Win as much as you can on your wins. Okay? The second part of this rule, never assume how much money you want to make. It's so important. Anyone that gives or says that they want to make £100 today is contradicting the idea of uncertainty and accepting it. You're not going to know how much money you're going to make. All you can focus on is trading well. If you're trading well, then everything else follows. That's what you need to get into your mind. All right? You can never be in a position to say, right, today I'm going to get up. I'm going to open my trading screen and I'm going to make myself £500. God forbid, if you actually do make that £500, the next day you're going to want to make £1,000 and it's going to cost you your account. That's the problem with going in with intention to make money. Go in with the intention to make the right trade. A victory for me is when I place a trade and I say, right, what was my drawdown on that? Oh, I only risked 7 pips and I managed to bank myself 25. Brilliant. My risk reward, I know they say to you, always set up your risk reward before you place a trade. But once I say I'm going to go for a 2-to-1 risk reward, in my head I'm thinking I put £10 down, I make 20. Put £100 down, I make 200. If I put £500 down, I make £1,000. I'm already going into that portal of thought where I'm expecting to make £1,000. I work out my risk reward after I've made the money because I never knew I was going to make it in the first place. So then I avoid that problem, all those emotions that come into play when I'm in a trade saying to myself, oh, I really hope I hit 2-to-1, or I really hope I get 3-to-1, 4-to-1, whatever to 1 it is. All right. Look, a lot of the logic behind the way I approach trading is counterintuitive because this industry of trading, where it's advertised all over the place, conditions people to believe a certain way is required to trade. Now, I've experienced so much when it comes to trading. And I'm still learning. I'm 35 and I'm still, I'm so young in the game. And even the guys who have been trading for many, many years, they're still learning because they're learning about themselves. And as they get to that late stage in their life, they've just come to a respect for the market. And that is one respect that I'm gradually coming to terms with now, where, you've got to be careful. This game is not for anyone that's lazy, all right? You've got to be sharp. You've got to be you've got to be prepared to cuss at yourself. You've got to be prepared to say, look, you idiot, what are you doing? You knew it was wrong, so why did you follow through with it? What's going on, Trading is probably the best feedback mechanism about your character. There have been many instances where I actually closed the trade after I lost so much money in it. And I look back and I'm just like, man, what did you just go through? I've put myself in positions where I'm actually looking in the abyss, black holes, man. I've been so frustrated with myself, angry with myself. And I vowed to myself that I never want to put myself in that position again. And let me tell you something. While I'm trading in my day-to-day, it does creep up on me. There are instances where I'm like, close the trade. No, don't close the trade. No, just wait. Hold on. Close the trade. I have this battle with myself continuously. And I'm so glad that I use a laptop because there's only one thing that I can do. I can just fold the laptop. With a desktop, you kind of walk away, but it's still there. It's showing you. And it's psychologically, a laptop is good for me because once I close the laptop, believe me when I tell you this, every time I close my laptop, I feel so much better about things. But then I realize that I'm still in a position, so I'm going to have to open it, or it, depending on the situation that I'm in, if I haven't closed the trade, then closing the laptop is a good thing and walking away, you know? But all I need to express to you guys is finding out how you behave when you trade is the critical part for the mindset development. If you remember, I said earlier that I've repeated a mistake for years. And I was completely oblivious to it. You know, I was in denial, complete denial. I blamed the system. I blamed this. I blamed everyone. I never took responsibility. I never said to myself, you know what? You fucked up, Tina. Why can't you accept that? So if we can't accept uncertainty, and one of the fundamental reasons why traders lose is they never accept responsibility for their actions, you're doomed. No wonder people lose in this game, because they don't marry the two together. You're not marrying the critical concepts. Forget trying to work out what happens next, and accept that if you make a mistake, move on and be responsible for that mistake and address it and say, you know what, I fucked up there. I won't be doing that again. Say you've been watching a currency pair or a stock, all right? You've been doing the research. You've been keeping an eye on the news. You know, you've been doing everything that you believe as a trader that you should be doing, all right? You've worked out your risk. You've worked out your target profit. You think that based on your analysis, you're going to go in for the long or buy, or you're going to go short. Then it comes to the moment of you actually placing the trade. You're thinking to yourself, this has to be a winner. I've done the work. I've got everything prepared. You know, I'm sticking to my rules. I'm going to place my trade. You place your trade. Now, one critical point is this. You've probably spent the best part of about a week or 2 weeks waiting for this move to happen, because you've studied the patterns, or you know, you've heard from groups of people on forums that, you know, dollar yen or Tesla's going to go a certain way. All right. So you think to yourself, right, I'm going to stick to this. I'm going to place my trade. I'm going to see what happens. Once the trade is placed, in your mind, you're thinking to yourself, how good has my analysis been? You know, have I done it correctly? Or, you know, you start getting these thoughts in your mind. There is self-doubt in there straight away. And it will always be that, because you can never guarantee 100% that just because you've done the analysis, it means that it's going to flourish purely because you have done your analysis. The market doesn't care who you are. No one can move the market except the market makers. And even with banks, hedge funds that come with deep pockets, market makers' pockets are deeper. All right? So, you're watching your trade. Your trade looks like it's going to play out. Then it starts to go a bit south. You start watching your trade edging towards your stop loss. In your mind, you're thinking, nah, man, come on, it can't hit my stop loss so soon. Oh, has my stop loss been correctly placed? Have I allowed freedom for the price, you know, for the stock or the currency pair to move? Oh, what am I going to do? I've spent 2 weeks studying this. It surely can't hit my stop loss just like that. You know what? I'm going to move my stop. You move your stop. Then you start to see it retrace back. So you think, yeah, it was a good move actually. I moved my stop at the right time, you know, and it's now starting to do things the way I'm expecting it to go. But then it starts to change. Price then starts going further down. You're then put back into that position that you were a few moments ago, where you're moving your risk. And then you think, look, I can't. I'm in the trade now. I can't stop. I'm just going to move it. You move it again. It then comes to you a third time where you're having to make the decision, should you move your stop again? In the end, you say to yourself, you know what? Forget it. I'm not going to let the market win. I've put so much work into this. I've done the homework. There's going to be a move to the upside. All right? I'm going to get my move. It's going to go in my direction. So you completely remove your stop Now you're trading desperado. There's no stop in place. Now the one question you got to ask yourself is, does your bank balance, or should I say your capital, allow you the flexibility to not trade with a stop? Especially in currency markets. Man, you can 100 pip move to the upside or the downside in a split second can happen at any moment, and that's without news. I don't know if anyone remembered when dollar yen tanked. It was a few months ago. It dropped nearly 100, 200 pips. About 300 pips in the Asian session. And I watched that move. I didn't take a trade. I was just getting myself prepared for the Asian session. And I was, getting things in play, looking around, seeing what's happening. And then before you know it, I see this big red candlestick drop. All right. And it was something to do with the Swiss bank, changing their interest rates out of the blue. But anyway, back to the point. The trader that moved his stop in the first instance was setting himself up for doom, okay? Because you fall into this vortex of thought where you're starting to become so loyal to your analysis. You're scared to say, you know what, I can't be wrong. I put so much work into it. Who gives a fuck? The sooner you accept that at any moment you have to close the trade, or at any moment you are wrong, the sooner you're going to be able to trade with a flexible approach. You're going to be able to trade carefree. You're going to understand that the moment the trade is made, whatever analysis you made is irrelevant. Because it's live. The trade is live. Never, ever, ever move your parameters of risk once you're in a trade. Don't do it. If you know you're going to do it, don't even put a stop loss in place. And if you're not going to have a stop loss in place, make sure you're trading as light as possible. So that 100 pip move would only hurt your account by 3-4%. I'd say this rule here it did take quite a while to understand, really. I always had this idea that every trade needed to be perfect in order for it to make money. And that right there was one of the reasons as to why I was losing so much, and as to why I was very hesitant to placing a trade. Because I thought if my analysis didn't weigh up correctly, I wouldn't make the trade. And then I would go back to the trade that I should have taken and see that it actually went in my favor, like 200-300 pips. And you know what that does to your trading psyche? It crushes it. It starts to make you install doubt, and the confidence, it just shatters it, because you're then kicking yourself saying, well, why didn't I just take the trade? What was stopping me from taking the trade? And that's one thing about doing analysis as well. Spending too much time making yourself believe that your trading analysis has to be somewhat of a like a dean university, should I say, like someone of hierarchy, that your analysis has to be so good that the trade that follows it is going to be profitable. It doesn't. I'd say now, when I place a trade, I open my charts, I'm looking at the screen, I'd say within 5 minutes I'm placing a trade. I don't care what's happened in the background. I don't care what happened 2 days ago, 3 days ago. I look at what's happened probably the last hour. Because for me, that's really a true representation of what could be happening in the near term. For example, if I'm seeing that price is dropping, right? And then if I see price has been dropping and where price is now, it looks like it's retracing. I'm going to ask myself, okay, how much of this downtrend, right, has actually confirmed to me that market makers are satisfied with the downtrend? Are they satisfied that they've managed to obtain loads of longs in that area? Or should I say, they've built their long positions at the lowest possible price with anticipation to close them at a higher price later on? is this retracement effectively setting up to become a markup phase? And it takes me about 5-6 minutes to work out that question. If it takes, the answer to that question, if it takes me any longer, I pull back and I ask myself, okay, what's price doing now? Is it above the 50-day, 200-day? What angle is the 50-day and the 200-day? Is there momentum in this move right now? If I go into this trade right now, what's the likelihood of me actually taking a few pips from here? I don't know. Fuck it, I'll place the trade. So I place the trade. One of the main skills that you need to work on as a trader is being impulsive. You have to be impulsive. You just place the trade. Now that's me saying it with experience, but for a new trader, okay, the best thing you can do is aim for accurate entries. Now, accuracy above 50% is really where you're at in the first instance. The reason being is because you're either right or you're not. Okay? So you're already at a head start. All you need to do is just place the trade. Depending on how well that trade goes is going to reflect your accuracy of your entry. You've also got the element of, if you place a trade, how much drawdown do you sit through before your trade becomes profitable? Now, I sometimes do this. There's a video that I'll post where I actually show you this sort of example that we're talking about. But I placed a trade and my exposure was about 8-9 pips. And it went to the upside and I made about 30-40 pips return. And then looking back at the trade, I was like, 8-9 pips exposure. What would I say, for an entry? Was that any good? How accurate was that entry? And then I thought to myself, hold on, that is a pretty good entry. I only risked, 8-9 pips of exposure on my account. I'm happy with that. But then let's look at the trader that aims for the perfect entry. See, the new trader will think that the moment he places a trade, it's going to go in his favor. Anything else after that, he's in the wrong trade. And he starts scratching his head and he starts getting a bit concerned and emotions come in. He's going to take out his stop loss. He's going to fucking let the trade just go south before he actually makes a decision to close it. So much stuff goes through his head. By aiming to make your entries accurate, you're giving yourself more flexibility to trade with a carefree state of mind, because you know for a fact you're not ever going to make the perfect trade. In hindsight, maybe, but the moment you place the trade, it's never going to be perfect because you never know where it's going to go. In my honest opinion, I'd say this rule had more of an effect on me than what rule 2 did. Paying myself was something that I struggled to do in my early years of trading. And it's probably why I was losing all the time and why I just kept depositing and depositing. I just never ever paid myself. I was always wanting more. I'd love it when I'd see the trade just go in my favor, and it became something like it was some artistic work being, developed. When you see a painter and he's just getting into the flow of it, and then you can see his image starting to come to fruition, and he's like, the masterpiece is ready now. And that's what it was like. I'd be looking at a trade and it would be going in my favor, and I'd be like, wow, I'm making 200, 300, 400 pounds at a time. Yeah, it's going up, going up, going up. And I'm just sat there and I'm just thinking, I'm just going to continue about my day. I'm going to go toilet, or I'm going to go outside. I'll come back and my trade will still be in that profit. My gosh, I was so far from the truth, man. I've lost so much money with this sort of mentality. I never paid myself, all right? I never rewarded myself for my trades. And that's something that a lot of traders, new traders, do. They think that because it's in profit, it's going to stay in profit. Hell no. Remember, you had no idea it was going to be profit in the first place. What makes you think it's going to stay in profit? Protecting your profits is effectively protecting your capital. Do you know what it does to someone to see a trade that goes in your favor and you've got £300-400 on the line, that you've got profit sitting there fluctuating, and you do nothing about it. But when it goes to negative territory, you're there you're there so quick, ready to close the trade and be like, oh gosh, I can't lose any money. Well, you've just lost £400 by not closing the trade. Do you understand that by not paying yourself because you feel that you've done the victory trade, what it's going to do to you in the long run, it's going to install in your mind that you're not worth any profit in your trading. You know, you're subconsciously sabotaging yourself in the belief that you don't deserve to take a profit. You just like to trade. You like to tell people that you're a trader. You know, you change your bio on your LinkedIn profile or your Instagram profile or whatever. Social verification, once again, you could be a losing trader, but you tell everyone you're a trader. When someone asks me, what do I do for a living? I say I put my hands in a few pies and that's it. I dib and dab. Bit of a Del Boy me. That's what I like to say to people. Because when I start conversating with people about trading, they're like, what, gambling? I automatically know that their level of thinking is not set or ready for me to continue with the conversation. I just don't need to waste my time with it. Trading for me has made me, well, people say that trading is a very lonely business, but that's only out of choice. You know, I keep trading, I keep it very close to my heart. You know, I won't tell anyone what I've made. I won't tell anyone what I've lost. I'll actually tell a lie. I had some guy call me out on TikTok and I showed him my losses and I never heard from him again. And then I had another guy saying I don't see any profits in these positions, and I showed him a couple of profits from the COVID and I never heard from him again. But in my 10 years, that's the first time I've actually had to do that. But anyways, my advice to you is this. Your goal is not to make money when you first start out in trading. Don't put that pressure on yourself. You have to experience so much before you even think about making a buck. You know? Your goal is to make sure that you get a structure and then stick with that structure. Get used to applying that structure. Execution. That's what your focus is. Getting used to placing a trade. If it wins, great, take the money. If it loses, great, take the short loss. Stop putting pressure on yourself in the belief that just because you've made the conviction that you're going to start trading, you need to start earning the big bucks. That's a sure way of getting your account blown, and I'd say a great chance of you quitting in this game. Because that's the problem with new traders. They come in thinking that, okay, right, I want to change my life. I'm going to be a trader. Let me go and deposit some money and let's hope that I can actually make this my new living. Trading will be an enjoyable journey for you only if you allow yourself to take the smooth steps. If you start trying to climb the Everest, all right, I promise you, you're going to struggle. You know? I go by the mentality of, jumping at the deep end. Well, that is so you can get a feel for what it's like, But I will never put myself into a situation where everything relies on the way I perform. And I've got nothing behind me to say that I'm ready for it. That's like going into a fight with Mike Tyson in his prime 15 minutes before the fight. You wouldn't, would you? You'd probably spend 2 years of your life trying to get yourself into the position where you think you're able to fight him. So give yourselves a fighting chance. Study this, but more so study yourself. Work out, what are you like in times of uncertainty? Because you're not going to know, or should I say, you may not have the capital to sit through all the drawdowns and learn about your character. You're coming into this game to make money. Take away that pressure. You don't need it. And that's what's going to set you up for making mistakes and repeat them over and over again. Work on how to place a trade optimally. Work on your behavior when you're in a trade. Here's an exercise for you. You want to be a trader? Okay, then here we go. Deposit £1,000 and try and place a trade where you are fully margined, where you're putting down the most that you physically can. All right? And let's see your behavior. Let's see if you're not itching. Let's see if you're not, breathing in continuously and, holding your breath and you start sweating. You know that £1,000 is going to go, Let's see if you enjoy that experience. Because if you're coming into trading thinking that you're just going to put money down and it doesn't matter if it goes because you're just trying it out, get that out your head. You've got to take trading seriously, man. There's no money for you to lose on purpose. Don't do it. Give yourself a fighting chance. Learn and develop. Grow and apply. You've probably come across the traders that blame everything other than themselves. They'll blame the market. They'll blame the broker. Blame the wife, the dog. They'll blame the neighbors. They'll blame forums. You get the idea. That was me. There have been so many instances where I was convinced that the market had it in for me. It's like it didn't care about anyone else. It was only concerned about my trades, and that every trade that I placed needed to be a loss because the market had it in for me. I became this person who was really defensive. I was always like, yeah, okay then, fine. How about this? And let me drop another 10 lots on you. Let's see if you like that. Yeah, I'll go into margin. Yeah, let me do that. Let's see if you like that. The market doesn't give a shit. The sooner you develop a respect for the market, the sooner you'll be able to trade with the mind knowing that anything can happen. One thing I do think is really funny is this. People say that you should see trading as your business. That's the biggest BS I've ever heard. It's not your business. The business of trading, okay, the market, should I say, belongs to the market makers. The market makers created this way to exchange money between banks. Us retail traders, okay, come in thinking that we're some, the greatest thing ever, all right, and think that we can rule this market. No, it's not our business model. It's the market maker's business model. Now, if we're smart, we can take advantage and exploit the market makers and take whatever profit we can from the market makers. They are not there for us. If anything, right, we are there for them because it's our liquidity, our trades, our profits, our money that they use to get their orders filled. I mean, the market makers, they get the money from the banks, hedge funds, you name it. There's enough money. You think that retail traders' money is going to, it's going to make the market makers think, oh, we've got to be careful now. There's lots of these little retail traders about. Nah. They exploit us. They manipulate us. They send price to certain areas that they know that all us retail traders are looking at. Let's take the Fibonacci's. Why is it the 61.8 Fibonacci retracement level is so critical? Other than the fact that it's considered as the golden mean, the market makers know that whenever there's a high and then there's a low established, they know that there's going to be thousands and thousands of traders drawing those Fibonacci retracements and placing their entries or their stops at those levels. So the market makers allow us to use their platform so that we can fulfill false prophecies and say, yep, price is going to go in that direction because Fibonacci's rule of the golden mean says so. Now, most of the time it does work, but the reason why it works is because the market makers allow it to work. They want it to work because they know that they can get their orders filled by your liquidity sitting at the golden mean. Now, there are some guys that have made a successful living off the Fibonacci's. You know? There are guys that are killing it. They're the ones that understand that the market makers allow us to use these retracements areas, okay? And they get their money out before they are part of the guys who lose their money when the market makers change the course of direction at these retracement levels. You know? Yeah, you're probably thinking, like, what on earth has this guy just said? There is so much to trading that people are not aware of. It's a massive marketing tool. Here's one for you. Look at every single broker. It says always put your stops, always put your stop loss. Make sure that your stop loss is in place. You know, there's a risk of losing all your money. Make sure you put your stops, put your stops, put your stops. I know you see it. And every other trading guru is going to tell you, put your stop loss, put your stop loss. Always respect your stops. All right? I even said it earlier on. But I said about risk, you know? I said they understand, know your risk, know how much money you are happy to lose. If it's whether you put a stop loss in place or not. I personally don't use stop losses. And the reason is this. The platform that we all use, whether it's MT4, TradingView, whatever it is, okay? Behind that is the broker. The broker can see our stops. The market makers can see our stops. Why do you think, okay, you see price whip and whack, it goes to extremes and then comes back down to normality? Hey, do you think they do that because news has come out? No, they use the news to do that. But on some days, you do see price spike out of nowhere. Why? It's called a stop hunt. It's because the market makers can see where people have put their stops, where dead money is sitting. I don't like to have that exposure. I think my broker doesn't like me because they can never know where I'm going to close a trade or where my stop is. They never know my level of risk. And believe me, behind every trade, or should I say, behind every trader, whatever broker that they are with, they are watching the account. They're going to know in an instance whether or not this trader is going to be a winner or a loser. All right? And because 95% of traders lose in this game, it's easy for them to filter out the shit. They just know that that trader is going to lose completely. Which is why when you see some successful traders, they're very particular about their brokers. Because they know that behind the scenes, the brokers are watching their account. And they can manipulate price. Believe me, they can manipulate their price. They can change things about. It's an unregulated market. The only thing that they need to make sure that's regulated is, what is it? The Anti-Money Laundering Act of 75, where you can't deposit and withdraw into a different account. Well, yeah, I think it was, you can deposit into an account, into a brokerage account, but you can't withdraw into a different account, a credit card. That's the only thing that protects people in this industry. Everything else is just unregulated. All right? Now, I don't know if I'm saying things that you haven't expected to hear, but that's the truth. And when you've been in the game long enough, you start to see this happening over and over and over again. When someone says, oh, you know, I put my stop here and it never got hit. It got closed like 10 pips after. And then I contacted them and they said it was just because there was a massive order flow. It's the biggest BS ever. Do you know in a 1 minute time frame, millions of pounds, thousands, so much money is exchanged at that 1 minute candlestick? And you're telling me that there were too many orders in that instance and it didn't allow me to close my stop? Nah, it's happened too many times. Google it, go on YouTube and just look at guys, if they've put the videos up, look at guys who talk about their brokers manipulating their platform. You'll see them write about it or talk, whatever. So with what I've just told you guys, do you understand why you need to make sure that you don't think you're better than the market, or you have to have a level of respect for the market, because you are operating not just in uncertainty, but you're operating in an unregulated environment. Anything can happen. Why do you think everyone goes to stocks? Stocks and shares are as regulated as possible. Market makers' behavior in stocks and shares it's monitored, if anything. Okay? They can only really manipulate price in certain ways where it's deemed it's supported, or should I say how can I explain it? The best way to put it is they turn a blind eye as such because it's within the parameters of the law. They're sticking to the guidelines. And that's why inside trading is such a big thing with firms, and why they just drop on guys that do that, because they just, it's so regulated. Forex is you're swimming with the sharks, guys. And you think that your main priority is to try and find a system that's going to help you make money. That's not your priority, guys. Your priority is to become familiar with your behavior when you're up against the sharks. How defensive are you? Are you on the offensive, or are you on the defensive? Are you protecting your money, or are you ready to just give these guys your money that you work hard for and you put into this trading game with the best intentions to make something of yourself? It's a very admirable business to be a part of, because you're up against the most complex systems, some of the greatest minds, and you're fighting an algorithm, guys. It's an evolving algorithm. As I said to you earlier, respect this market. There's more to it. Forget social media. They make it look easy. I'm not saying it is easy. I'm saying that my experience that I've been through, my persistence, has got me where I am today because I stuck to it. The problem that most traders have is they're trying to become consistently profitable traders, but they're not focusing on trying to stay consistent within the market. Do you have what it takes to be able to lose continuously, and then always ask yourself why? Do you understand that? Do you know how hard it is to be involved in an industry where you're set for failure from the moment you start? It's that staying power that you need to work on. That's what you need to become consistent at, the staying power. Because if you can stay in this game, there'll be a point where you transition, where it comes to a realization where you're saying, right, there's only so many times that I can repeat this mistake. I'm aware of what it is. I know why I'm doing it. I need to work on not letting it happen again. If you've managed to get to the end of this video, right, I'll thank you now, because it's a lot to take in. These 8 rules haven't been just given as like a basic slideshow. I've given you, from my opinion, from my point of view and my experience, these 8 rules and how they've impacted the way I trade. Like I said, I've got them in front of me continuously, when I trade. And as I said, it's a build-up of experiences that I encountered during my journey that led me to create these 8 rules. So I thank you if you have been sitting and listening to this. And I apologize if there are any mistakes and trip-ups, but like I said to you, and I say it to you every time, I'm bringing it to you as organic as possible. All right, because I need you to relate to these, because they're only going to be impressionable on you if you can relate to it. You don't want it to be just that video where you see just fancy writing going across the screen, and then before you know it, you're watching another video completely off the topic of trading. I want to try and help you guys take seriousness of trading to another level. The final rule: give your methodology a chance to succeed. Trading is about sample size, and that is so true. I've spoken to a load of traders where they said, I've tried one system, it didn't work, tried another, didn't work, and I'm still trying to find the right system. I said earlier in this video that you need to have at least a sample size of about 100 trades before you start thinking that the system is for you or not. Give yourself a sample size of trades. Now, if you're a swing trader, 100 trades is quite a lot of trades to take. Now, as a swing trader, I don't know how long you perceive a swing trade for, like 2, 3, 4 days. I don't know. It could be a week. And you've got position traders that sit and hold it for like months, right? And then you've got the investors that just literally buy and hold, But when it comes to working out if a methodology is for you or not, you need to expose it to, how can I say this? Variance. You need to experience the variance in the methodology. When I say that, what I mean is you can have variance in your favor and it can be against you as well. All right? So if you have a system and you place 10 trades and you win all 10 trades in a row, you're going to be so euphoric and be like, wow, I've got the best system. You're going to be plotting on what you're going to buy. But then the moment it starts to deliver losses, you then start becoming reluctant to use the system. You start thinking, oh, I'm not happy with the idea of this. Were those 10 trades luck? Was it pot luck? Was I fluky? What is it? And that's the problem that most new traders have, is when they're trying out a system, back to what I said to you previously, we're always seeking the safest option, okay? They don't give the methodology a chance to work. Man, I'm hicking up today. They don't allow it to flourish. They don't grow with the methodology. They don't tweak it. They don't say, right, how is this going to work with me? Is it suited to my personality? Is this system suited for more of a scalper? Does this really help me as a trader who I like to actively watch my trades? Should I be utilizing this system when it's really designed for swing traders? Giving your system a chance to succeed, okay, is only going to happen if you dedicate time to working the system. It's no different to understanding a craft. If you want to learn about, let's look at a mechanic. A mechanic has to study everything inside of an engine to deem himself as a mechanic. All right? He has to understand it. Now, he can't make the mistake of thinking that he's only going to study one engine and then that's it. Yeah, you've got specialists, but I guarantee a specialist is going to be he's going to have the ability to work out what's going on in other engines, because that's just the nature of the industry. But what I'm getting at is this: if you focus solely on one thing and only something that you can work with, right? If it doesn't start working the way you want it to work, and you start pulling away from it, you're then going to be chopping and changing in between things, and that's not really what you're here for. You can't make yourself think that the system that you get is going to be the system that works for you. Hell, this system that I got that I'm going to be giving to you guys, it might not be for you guys, because partly this system requires a completely mindset shift. You guys are used to seeing green or red candlesticks based on how TradingView or MT4 delivers them, or you might change the colors. The colors that I see on my screen are a different kind of color. They're volumes, they're tick volumes, and they're telling me where money's coming into the market. Everyone's got a different perception of it. We're all looking at the same chart. That's the joke about it. We're all looking at the same chart. Some people will lose, some people will win. What's the difference? So my advice to you guys is this: when you find the system, make sure you can work that it is something for you. All right? Do you like the idea of how the system operates? Do you think it's suited for your personality? Because you're going to be working with it. All right? But even if you don't think it's going to be the system for you at the start, give it a chance to flourish. Dedicate your 100% effort into working the system. Then, after a sample size of about 100 trades, for example, look and say, right, this system has given me 40% wins and 60% losses. However, my losses aren't as much as my wins. So overall, this system is profitable. Because you can be a trader that only wins 40% of the time and still be profitable. Hell, you could be a trader that only wins 30% of the time and still be profitable. All right, so that finalizes the third lesson in Traders Reality YouTube course. If you're new here, make sure you do subscribe, because there's content that's going to be coming at you, and it's going to be taking you on angles about trading that you may not be aware of. My goal is to help new traders be aware of why this industry itself is set up so that everyone that comes into it fails at it. All right. So I'm going to do my very best to make sure you guys get this information.